I think I got enough content. Like I'm never gonna be able to edit it all, bro. Especially in one day and get it updated and get it uploaded. I'm gonna try my best though, cause it's been a while. All right, so just really quick, notable. Yeah, we had the reversal on Tesla, bullish pattern, putting in higher lows. Right here, it looks like we tried to head up, but we rejected. So consolidation, higher low, more bullishness, and looks like we tried to sell off, but they bought it back up. So the direction for now seems to still be up, but you can see it here. Look, on Nvidia, same thing, but look, Nvidia, bullish pattern, higher lows, blase squaze, bounced off the 9 EMA, opened a new candle above the previous candle, and also on the 120, which is definitely bullish. And now it tried to sell off, but it's like holding this 120 and trying to bounce off of it. This will be crucial, for tech and for the chips. Like, does Nvidia hold the 120 right here? And S&P, look, same thing. You feel me? And as a matter of fact, okay, now, where's 4,000 at? Right here. So right there, major psychological level. Broke it for a second, but then quickly regained it. And then just to kind of verify, look, bonds are heading down. And then you see that wick right there, rejecting off the 9 EMA. Apple definitely came down here and bounced decent. 1.3 million right there. All right, we're definitely seeing a reversal in the trend. And I said it, like the time, like if you were gonna go long on something, was like whenever I said that. Like bonds are selling off, and look, I mean, this would have been a nice little trade right here too. Look, because you see, look, Microsoft. What you see here is a nice double bottom. Look at that. One, or actually a triple bottom. 1, 2, 3. So that would have, like, if I wanted to trade that thing, that would have definitely factored into my decision to trade it, especially to the upside. Now, this is crucial. When the NASDAQ, when the Qs and the SPY get back up here to this 120, that's going to decide if we definitely have a true uptrend or not. You feel me? It's looking like, obviously, yes, but you don't know for sure. All right, so remember what I was saying. Like, we got to get up to this 120. And look, I mean, I don't really know what happened here. Like, there's a gap, but check it. The bonds sold off. They were selling off decent, right? And got down to around here to this 120 and tried to bounce. And I mean, it's kind of almost the same as, like, look, the SPY and the Qs were going up, got around the 120 and tried to reject it, but just didn't get to the 120. The same thing that basically the bonds did. So you can see how they correlate. You can actually see some correlation there. I'm still seeing some bullishness though. So we'll wait. I mean, I'm kind of curious to see what happens here between the bonds and the SPY right here, bro. I just want to see this last little move, and then after that, I'll go ahead and I mean, the price action is still kind of weird though, because the numbers came in cool and we freaking sold off. So like, I'm pretty sure there was a good number of people that were like, oh yeah, the numbers are cool. Definitely 50 basis points instead of the 75, which is bullish for the stock market. And I'm sure, bro, like, based off of that information, a lot of people went long. I mean, if a lot of people went long, bro, that means a lot of people lost money because the market sold off. It's like counterintuitive, bro. Like, but again, you would have had to be long in pre-market, or you would have had to catch most of your move in pre-market, because after the market opened, we didn't really see too much more upside action. And look, Here's your correlation. You're starting to see Apple sell off. Look, the Qs. Look, 1.3 million shares. They're dumping on it. It's going down towards the 9. The SPY sell off. But look at this. Look at the bond market. Look at the TLT bouncing. Now we can see the correlation a little clearer. See that correlation? And look, dumping, bro. Yeah, they're dumping on it, dude. Bonds are going up. Look at Nvidia, cracking. Cracked the 120 in the 9. All right. Look at Tesla. Got back up here to that level I drew out, 162.80s, and rejected. And again, direction. Look at the S&P 500, the SPX, rejecting here. And I guess, like, we're in this gap area, but there's price action in there now. So I guess, what's this? 40.21, 50s. Doug, I'm about to be like a cybersecurity professional, bro. I might be able to get me a job in cybersecurity, bro. Thanks, bro. I appreciate it. Just another skill I can add to my wide variety and plethora of skills and knowledge. Shit. If I ever apply for another job, I can put also a cybersecurity specialist on that bitch. Appreciate it. Thank you. So yeah, we're coming down, but the bonds are also like coming down. So it's kind of hard to call right now. But look. So, but what I see, I guess, if you want to do a little technical, a little TA, like off the hip real quick on the fly, intraday, look, boom, rejection, new candle open right there, sold off, bounced off of that, came down here and based for a little bit. I don't know. So maybe, but they're still selling off. Like, everything's selling off right now. You got the bonds and equities. So again, like, you can sometimes see the correlation, and sometimes there is no correlation. So it's basically just like any other thing in the stock market. Like, nothing is 100% guaranteed, but it's just like another edge. And like I've said on a lot of my videos, like when you're trading in the stock market, it's all about having an edge, and not just one, but as many edges as you can have. That way, because you know that nothing's 100%, but the more data points and or edges that you can have at your disposal to help you, trade and make the right decisions, the better off you're going to be. The better you're going to do, like, generally. That's why it's important to have as many edges as possible. You feel me? Because, for one, nothing's going to work 100% of the time. You feel me? Nothing's going to work 100% of the time. But the more edges you do have, the more likely it is that a few of them will work, and that will help you trade better. That will help you to make more informed decisions. Nothing's 100%, but if you have 20 edges, you feel me? Like, they all don't have to work all the time. Say for instance, if half of them work or 3/4 of them work, that's enough to help you get ahead. And this is all right, dude. I'm about to ring the register, bro. I'm out. Let me get out of my trade, bro. Let me get out. I'm about to ring the register. Let me out. I'll get out for a market order. Out. Locked in them gains, baby. Get my goddamn money. Motherfucker. Trading against the market makers, and hackers. And I can still make money. That's how I know, bro. When I'm able to trade unimpeded, I'm gonna fucking kill it, bro. I'm gonna be rich. You know what? I actually like it. Like, it's just making me a better trader. That's all. Alright.